let's talk about some of the tips that you have for folks. First of all, you got to look at your retirement accounts, you say, and maximize those contributions. How do you do that?
Well, walk down to your employee benefit department and check in on what you've been contributing and what you have contributed year to date. The contribution limits for 2025 are 23,500 for employees under age 50, 31,000 for those who are age 50 and older. And then this year, there's a special catch-up contribution for people who are 60 to 63. They can contribute up to 34,750. So if you're below those contribution limits, do all that you can to maybe increase the amount you're saving toward your retirement. And the good news is, that money goes in pre-tax. So that can lower your taxable income for 2025.
And do most people do this regularly, Bob?
I'd say they don't. Most people contribute, say, 6% of their own money, and the company chips in another 3%. So they're saving maybe 9% of their income. So if you're earning, say, $100,000, that's $9,000, and you're leaving a lot on the table if you have extra income. And for those people who might be expecting a bonus in 2025 and they receive it in 2026, this would be a good time to say, okay, well, I'm going to get some extra money. I'll cut into my current expenses to save a little bit more in anticipation of getting a bonus. So I'd say this November is a good time to sort of start looking at how much more you can contribute and get as close as possible to the contribution limits.
And then, Bob, the other thing that is governed by the calendar is, of course, open enrollment. And in particular this year, ACA, the Affordable Care Act enrollment, is going to be under even more scrutiny because we don't know what the subsidy situation is going to look like. So what do people need to be aware of when they are considering whether to enroll?
Yeah, so at the moment, the enhanced advanced premium tax credit goes away. So if you were receiving that in this current year, it's unlikely to continue. Your premiums are likely to increase next year if you're above the 150% of the federal poverty line. Expect that there'll be a lot of plans offered in your area. In some cases, there might be 100 plans offered. These plans range from bronze to platinum, and it really takes a lot of work to evaluate which plan is best for you. Don't focus on the premium if you're eligible for ACA and you anticipate enrolling in an ACA plan. Focus on the network. Are your doctors in the network, and worry less about the premium.
And what about things like whether to contribute to your HSA, for example?
Yeah, this is the HSA is called the triple tax advantage account. The money goes in tax-free, it grows tax-free, it comes out tax-free if you use it for eligible medical expenses. Right now, the limits there are $4,300 for individuals and $8,550 for families. And the one bit of advice I would give people is try not to use your HSA for current medical expenses. It was designed to be an IRA for healthcare expenses in retirement. And if you are investing the money for retirement, don't invest in, say, a money market. Invest in something that will provide you with long-term growth, like a S&P 500 index fund or something like that.
All right, that's a really interesting point. Bob, thank you so much. Good to see you.
Thanks.